Are you ready to uncover the real secret to trading mastery? Today we're stepping beyond the common talk of strategies, indicators, or risk-reward ratios. We're venturing into a realm of trading that's often sidelined, yet it holds the key to transformative insights. Picture this as the aha moment that redefines your trading journey, making a significant before and after in your experience. Stick with me until the end of this video, because what you are about to explore is far from ordinary. It's a potential game changer. If you are truly committed to elevating your trading skills, this is something you can't afford to miss. The time you invest here could be the pivotal step toward the trading success you have been striving for. Let's begin. Welcome to a groundbreaking moment in your trading journey. On this channel, we have journeyed through a spectrum of trading strategies, from bar patterns and moving averages to intricate candlestick setups, trend lines, gaps, and the highly effective dead and golden crosses. If you haven't yet integrated these strategies, it's time to recognize the missed opportunities for substantial profits in trading. In trading, success hinges on mastering just one effective method. Finding that one thing is the greatest discovery that allows you to make money and earn your living as a trader. So your focus should be to find the one thing that works for you, and in this video I'll tell you how to do just that. For instance, focusing solely on dead and golden crosses could mark your path to consistent market success. Doing this would likely allow you to be one of the rare traders who make money consistently in the markets. Let's explore the 4 main reasons why some of these strategies might not have been adopted. If any of them apply to you, please let me know in the comments below. Feeling that these setups are too infrequent? My suggestion: experiment with shorter time frames to gain confidence in these strategies. The key to trading success is not just in the strategy, but in the discipline to execute it. If you are thinking about automation, remember that discipline and solid methodology are your true allies. Skeptical about the simplicity of these methods? You're not alone. Most traders unconsciously refuse to believe that something so simple could be so effective in generating money. In fact, many comment on this and say it sounds good, but it couldn't work. I encourage you to run backtest and see for yourself how these simple strategies can yield substantial returns. Many traders have an unconscious blocker or blockers that prevent them from earning money easily. In fact, we hear sayings like "no pain, no gain," or "money doesn't grow on trees." The latter plant in the mind the idea that money is a limited resource and is not easily acquired. If you feel mental blocks are hindering your trading, this is a topic we can explore further. Let me know in the comment below if this resonates with you, and we will post more videos on that as well. But the question that I'm sure you still have in your mind is, how do I choose the best strategy? The answer is in the crucial aspect of this video: the profit factor. In order to decide which of the solid strategies you have learned in this channel to use, you must measure your profit factor with each one of them. Here is where the vast majority of traders fail. They do not know what the profit factor is, and in the best case scenarios, when they do know about it, they refuse to measure it, or they don't have the discipline to do so. In my private mentoring, I typically work with traders with 10 to 15 years of trading experience who are undergoing difficulties. During our first session, they usually complain about their misfortunes and lack of success with this or that strategy. Invariably, I ask them about their profit factor, and in 99.9% of the cases, they either have no idea what I'm asking or they never bothered to measure it. A profit factor below 1.5 is a red flag indicating a high risk of depleting your trading account or losing it altogether in the next few months, weeks, or days. This is what I tell my students. Aim for a profit factor of 2 or higher before going live. And to you, my dear subscriber, I would add, your profit factor must be 2 or higher before you adopt any of the strategies we have discussed as the winner. And remember this, your profit factor must be 2 or higher before you trade with real money. Please allow me to be obnoxious for a moment. This is not to be ignored or postponed. Neglecting to measure the profit factor for each strategy you have learned so far will be an indication of your potential failure. It is imperative to test each strategy at least 100 times. Keep detailed record of your earnings and losses. Only adopt a strategy as your primary method when it consistently demonstrates a profit factor of 2 or higher. And I know what you are thinking right now. What on earth is the profit factor? Profit factor refers to the statistic that tells you how many dollars you made with a particular strategy against how many dollars you lost. The formula to calculate it is easy. You simply divide the gross profits on winning trades by the gross losses on losing trades. Please notice, I am talking about gross profits in dollar amount. I am not referring to the number of trades you win or lose. So it is not the winning to lose ratio, nor the reward to risk ratio that everybody talks about. We are talking about money. Gross profits divided by gross losses. In other words, money that you made against money that you lost. If you only divide the number of winning trades by the number of losing trades, you won't get a profit factor. In fact, you could win 80 and even 90% of your trades and still lose money due to an extremely low profit factor. Let's say that in your 100 trades, you won 70 trades and lost 30. That means 70 divided by 30 equals 2.3. In that case, your profit factor would be ideal. But we are not considering the amount, the dollar amount, and the proper formula should include the dollar amount, not the number of winning and losing trades. So let me show you better. What if you won a total of $35,000 on your 70 winning trades at an average of $500 per trade? And in your 30 losers, you lost a total of $30,000. Then your profit factor would be 35,000 divided by 30,000, which equals 1.1. That's unacceptable according to our standards. Remember, you need a profit factor of 2.0 or larger in order to adopt any of the strategies you have learned in the Technical Analysis Institute channel and adopt it as your winner, as the strategy that you use to earn your living. Failure to do so, that may result in losing your accounts again. Yes, I am aware that many traders lose their trading accounts several times, and I can assure you, none of them use the profit factor before they started trading live. Now, let's say that you only won 60 trades, but the dollar amount you got on those 60 trades was $60,000 at an average of $1,000 per trade. And on your 40 losses, you lost $20,000 at an average of $500 per trade. Your profit factor would be 60,000 divided by 20,000. That equals 3. That's a great profit factor and 3 times bigger than the one you obtained with 70 winners. So your profit factor is a lot more important than the number of winners you may have with a particular strategy. You can actually win only 40% of the times and still earn large amounts of money as long as your profit factor is above 2. I know how difficult it is to accept this because we believe we should win every single trade we take, but that doesn't happen and probably never will. Remember, a high profit factor is more crucial than a high winning rate. You can have a lower win rate but still maintain high profitability with a strong profit factor. Consistency in testing across different strategies and time frames is vital. You need to test each strategy a minimum of 100 times to have a significant number of your stats. You cannot change the time frame during the test. For instance, if you are testing the Golden Cross strategy in a daily chart, you need to have 100 trades using the daily chart. If you want to test the same strategy in a 4-hour chart, you'll need to run a separate test for that specific time frame. Please keep in mind that we do not recommend day trading, but if you do want to day trade, make sure your profit factor is well above 2.0. Good luck working on your profit factor and happy trading!